Welcome to the Weekly Option. This is episode 64 on June 1st, 2019. I'm your host, Eric, and in this week's show, we will cover trades from last week on Sprint, Snap, and National Oilwell Varco, and we discuss three new trades on the Gold Miners Index, Wells Fargo, and Devon Energy. Now, it's always great to hear from listeners. If you have any questions about the trades presented here or about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. And I've also created a short video series to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, even though this was a short trading week, we saw some bigger movements in the major equity indices from a week-over-week standpoint. The Dow Jones Industrial Average fell 3%, or 770 points, ending the week at 24,815 points. The S&P 500 index ended the week 74 points lower, or 2.6% lower, closing Friday at 2,752 points. Now we'll get into the topic of the week, and the topic of the week is sponsored by the Option Studio. If you want to learn to trade options without any calculus or confusing language, visit the website to learn more about the online course. Visit www.theoptionstudio.com for more information. This week's topic of the week is about customizing risk exposure. So one of the best qualities of options is the ability to customize the type of risk you experience. So let's say you own a biotech company, own biotech shares, and that has an FDA approval coming. If you think the price will go down, you can buy puts or sell calls. Or you could buy put spreads or sell call spreads, or a mix thereof. Or if you expect it to explode, if you think it's going to go through the roof, maybe you buy the out-of-the-money call options hoping to multiply your money. A lot of times those 10 and 20 cent call options end up being worth $2, $3, $8. I've seen money multiply, and it's not like the lottery. It's because of the way options are set up and the way they are, the way they price. So it doesn't matter which direction you think stock will go. There's a way to use options to earn even more money while limiting risk. And it doesn't matter the scenario. There's an option strategy that can limit risk or add additional yield to your trade. So when you finally realize what's possible with options, you'll be as excited as I am each week on this show. I've had we've seen situations where the stock market goes sideways. What do? There are a number of strategies that earn money whether the market is going up, going down, or you put on when the market's going sideways, or as you guys have seen me do on the show, putting together positions that are sort of like a plan B. Plan A didn't make money. Let's go with plan B to mitigate any losses in the position and to steer this thing back to profit, hopefully. So there's a great reason to understand options, and we see professional traders, using options as a tool in their sort of tool belt for making money for the company. I believe regular investors should learn to better understand options to trade and protect their investment capital. So it's not just, hey, go trade options because it's a great way to make money, or go trade options because you can get rich quick. You're not going to. It's possible, but most likely you're not going to. At the end of the day, though, you learn options because it's a tool that you need to know in order to truly be able to make the most money and make the most of your efforts in the stock market and the futures market at that. So that's it for this week. Definitely email me if you have specific risk that you're trying to offset. Maybe you have a long-term stock position that's not doing anything for you, but you don't want to sell it. Or you have a position that's been way too volatile, and you need to find a way to be able to sleep at night. There are great option trading positions for that, and I'm always up for talking shop. I love talking about option trading. I love trading options and helping people figure out how to make money in their positions. So definitely reach out to me. Email me at eric@theweeklyoption.com and we'll have a chat. Recently, I've been listening to the audio version of The Intelligent Investor by Benjamin Graham, and I can't remember if it was in Graham's writings or in one of the commentaries that's placed in between each chapter, but they mentioned that there are several words that if you hear, definitely run the other way or immediately expect fraudulent activity. And one of the phrases that they said is option strategy. It about broke my heart when I heard this because my whole life has been in this realm, or a large chunk of my life has been in this realm of option trading and option strategies. Where I agree with them is that if someone just uses the term option trading and option strategies as a means of sounding smart, then absolutely go the other way. But you guys who listen to this show and take the time to understand options, that phrase, option strategy or option trading, should not make you afraid. In fact, if you can't understand the option strategy that is being proposed by, say, a fund, a hedge fund, or any of your friends, if it's so complex that you can't figure it out, then run the other way. But most of these are not that complex. I mean, people think that option spreads are complex. We talk about them every week. If you listen to this show, option spreads, you realize, are no more complex than stock spreads. You could trade Google versus Apple, or Apple versus Microsoft, Dell versus Mike. All of these spreads are available in the market. Using them in options doesn't make them any more risky. In fact, it makes them less risky because we're doing spreads in the same month on the same stock, on the same type of option, call options and put options. So if you learn to understand options and understand what makes them make or lose money, this is such a valuable, almost invaluable tool in your own management of your net worth. So let's get into the trade review for last week. This was a short week, of course, due to Memorial Day having been last Monday, and the market closes for that. So we only had 4 days of trading this week. Now, we start off with our covered call on Sprint. Symbol for Sprint is S as in Sam. The stock last week, when we looked at it, was $7.16. We looked at buying that stock and selling the June 7.5 call, collecting 35 cents, hoping to yield a 9.64% return in 4 weeks. Here we are a week later. Sprint stock finished the week 29 cents lower, closing at $6.87 per share. The June 7.5 call option we sold can now be repurchased for 43 cents. And an increase of 8 cents. So it's very unusual that the stock goes down, so we lose money on the stock, and the call that we sold goes up in value. We actually lost money on both sides of this trade, which is a total of 37 cents that we lost. Now, I would definitely advise closing the June 7.5 call position by buying it and then selling the June 7 call at 50 cents. So we'll just roll the strike lower. Now, as a side note, the reason why we're losing money on this is the bid-ask spread on that 7.5 call is 19 cents wide. This was only a 35 cent option, so you normally don't have a bid-ask spread that is 50%. That's an indication that there's some news coming as well. So keep an eye on that. That's just highly unusual. So if we were to go with the even just the midpoint, then we would not have lost money on that call option. So let's see what happens on Monday. If you participated in this trade, definitely wait to see what's going to happen on Monday before you make a decision. But I'm always a fan of buying in the call option that we initially sold as the market has gone lower, and let's sell the closer to the at the money call option, which is the June 7 call. Of course, we have 3 weeks left in June, so you still have some time to turn this into a money maker. Our next trade was the credit spread on Snap Inc., symbol SNAP, Sam, Nancy, Adam, Paul. Stock ended last week at $11.56. We sold the June 11 put spread, collecting 18 cents, which sets us up for a maximum loss of 32 cents if the stock moved against us. Well, Snap, but this is the owner of Snapchat. Their stock ended the week 33 cents higher. So it closed at $11.89. The out of the money put spread we sold is even more out of the money now. So the spread value is still roughly the same. When I looked at the options, it's roughly the same as where we sold it. However, we got the move that we wanted in the stock market. So we sold a put spread, which is a inherently long position, and the stock itself went up 33 cents, which is great. So if stock prices stay here over the next 3 weeks, we will be able to keep the entire 18 cents that we sold the spread for, which is our goal when we have a credit spread. So this spread should start to depreciate quickly in the coming week, especially as time narrows and comes on off. Now, our final trade from last week is a debit spread that we looked at. We looked at National Oilwell Varco, symbol NOV, Nancy Oscar Victor. The stock ended last week at $22.39. So we bought the June 23 22.5 put spread, paying 31 cents, and that's hoping for a maximum gain of 19 cents on the spread, or a 61% return in 4 weeks. Well, National Oilwell Varco stock fell $1.54 this week. The in-the-money put spread, which we bought last week, is even more in the money now. So when I look at the option spread prices, the spread itself only changed 1 penny, but once again, we know this spread will increase in value if stock stays here or even continues to move lower. I expect this spread to expire worth 50 cents all in, so that will allow us to collect a 61% return on our capital. Now, that can sound too good to be true. I mean, when I tell people I put on trades that have a 50% or 60% possibility from the start, a lot of times they think that I'm lying or I'm doing something crazy, or maybe I'm talking about, cryptocurrency. But the truth of the matter is you can look at trades in the stock market. I'm not doing anything crazy. This isn't even Forex or anything. You can look at trades that are available to you today in the stock market that if you do the simple math on it, you have a good shot at collecting 61%. And your risk is limited. We know that our risk on this trade in real terms is $31 per spread that you put on. That's it, $31 per spread. So if you wanted to use $100 to test out options, you could have bought 3 of these spreads, right? That's how simple this is. So simple math can sometimes lead to abnormal returns, and that's why I stress the importance of simply understanding option trading. So let's get into this week's trades. We will look at June once again, June options this week, and maybe next week. We'll see how next week goes, but there's only 3 weeks left in June. I like to give myself a chance to fix a trade if it goes against me in that month. So that leaves us with definitely this week and possibly next week for June trades, and then we'll move on into some July trades. So we'll start off this week as usual with a covered call. We're looking at an ETF. It's the Direction Daily Gold Miners Index. The symbol is NUGT. Nancy Uncle George Thomas. Looks like the symbol nugget since it's gold. So NUGT. The stock ended the week, or the ETF ended the week at $17.08 per share. And I'm looking at buying the stock and selling the June 17.5 call at 95 cents. Now that yields a 7.9% return in 3 weeks if this stock goes up to $17.50. Now, you enter this trade by buying the Daily Gold Miners Index for $17.08 and then selling the June 17.5 call at 95 cents. This trade makes the most money if stock prices finish above $17.50 per share, and the break-even price for this trade is $16.15. Our next trade is a credit spread on Wells Fargo, symbol WFC, William Frank Charlie. Stock ended the week at $44.37, and I'm looking at selling the June 44.5 45 call spread at 22 cents. That leaves us with a maximum loss of 28 cents. You enter this trade by selling the June 44 half call at 97 cents and concurrently buying the June 45 call for 75 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices stay below $44.50. The break-even price for this is $44.72. I oftentimes like trading the bank stocks in my own portfolio. Actually, not the stocks themselves, but the options, because they tend to move around enough to offer some good option pricing. And the banks right now are all, if you look at them, most of them are trending down. So that puts us in a situation where we can take some chances. Like this call spread is valued much higher than normal. Typically, I look for about 15 to 18 cents in a trade of this nature. Collecting 22 cents is pretty high. So you'll have to dig in a little bit more just to make sure that you understand any news, any other factors that may be pushing the spread higher. But Bank of America offered some great trades this week. Wells Fargo offered some trades that I liked. I didn't look at JP Morgan Chase, but I'm sure they'd be in similar fashion. Morgan Stanley tends to not offer as much, and it's rare that I look at Goldman because Goldman's share price is so much higher than the others. I like to keep many of my trades within a 50 cents or $1 spread range, and when the strikes are $5 apart or even $2.50 apart, it doesn't really change your likelihood of earning money, but it does mean that it increases the cost in real terms of being wrong. So it's just sort of a capital, a money management idea. But I like the banks. They tend to offer great trades. If I try to every week we could talk about banks and talk about ETFs. So I try my best to limit it. So Wells Fargo is one of the ones that I like to look at. So hopefully you enjoy this trade. Now, our final trade for the week is a debit spread. We're looking at Devon Energy, and it's funny, all of the energy companies right now, I don't want to say all, I shouldn't say all, but most of them have some, are trending lower as well and have some great trades available. So this is one of the ones that I liked. So Devon Energy, symbol DVN, David Victor Nancy. Stock ended the week at $25.16, and I'm looking at buying the June 26 25 half put spread for 34 cents. That's going to yield a maximum gain of 16 cents or 47% return in 3 weeks. Now, you enter this trade by buying the June 26 put for $1.65 and selling the June 25 half put at $1.31. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices stay below $25.50 per share. The break-even price on this trade is $25.66. So that is it for this week. I hope you guys enjoy the show. Definitely take a look at the trades that I presented. I will also be adding video for the trade, for each specific trade, where I'll talk a little bit more about it. So keep an eye on our YouTube channel. If you subscribe to the weekly option on YouTube, then you'll get alerts whenever we post a new video. And I post a video for the podcast each week, but I'm now adding video for our trades as well. So I'll go a little bit more in depth on the videos so you can understand a little better, maybe ask questions if you have them. And definitely feel free to share the videos or this podcast with other friends who you know also trade options. So that's it. Have a great week. Happy trading.